Ken, let me kick it off with you. Your reaction to what you're hearing in terms of stimulus. Is this what the market needs?
Absolutely. I feel like the last few days here, from Tuesday's tumble to wonderful Wednesday, I guess we'll name every day of the week, we've been playing deal or no deal, right? And without Howard Mandel. But, we're really looking at this. I mean, as much as the election uncertainty is important, the virus uncertainty is important, of course, the trifecta now add in the stimulus uncertainty. It's really funny. The market likes the wall of worry. It's got it all, right, Maria? It's got every part of worry you could think about. And actually for October, the market's higher. Look, we think now, unfortunately, we're probably more in the third or fourth inning of the baseball game with this virus. Again, a lot of people like to think we're in the seventh or eighth inning. It's going to take some time to get the vaccination, the implementation of that, acceptance of the vaccination. So we're still going to favor technology, especially on pullbacks like we have on Tuesday. And the reason why we favor technology, it aligns perfect with the stay-at-home economy, remote economy. I think people who are nibbling at cruises and airlines and those type of entities are really too early, and they're going to be kind of in quicksand for some time, missing out on the opportunity cost of technology. So, again, I think we're going to continue to play this deal or no market. Yeah.
Yeah, because the digital economy is certainly penetrating even further as most people are at home still. Meanwhile, let's talk election. Vice President Mike Pence, Senator Kamala Harris squared off last night in Salt Lake City. Tax policy came up with Senator Harris stating a Biden administration would repeal the Trump tax cuts. Pence arguing in favor of the president's move to cut taxes, citing the impact that it had on the economy back in 2017. Bryn, what impact would repealing the president's tax cuts have on earnings and on the broader economy?
Yeah, well, so I think that, ultimately earnings drive stock prices higher. And as we're thinking about what causes multiple expansion, which is the price and it's the earnings. And really, if you look at estimates right now, we're about $163 per share for 2021. And if you look at not only repealing the Trump taxes, but if you look at increasing the corporate tax from 21 to 28, the repatriation of cash back into the U.S., that's going to be taxed higher. And then also increasing a minimum corporate tax to 15%. Right now, there's, once again, $163 estimated for 2021. Those three together collectively take $14 off of those numbers. And so the E obviously gets smaller, increasing the PE overall. And so I really think that analysts going forward haven't all together come out and really put together two different earnings forecasts, whether we have President Trump stay in or Biden in a flip Senate. But I think it's really important because definitely the earnings are going to take, a pretty meaningful hit just with those three taxes there.
Yeah, because taxes will go up, costing companies more money, and that certainly will also impact the broader economy and the stock market, we should point out. Look, we've got news this morning on Disney, calls for a change to Disney's investing strategy and how they allocate capital. This is from activist investor Dan Loeb. He is calling on Disney to forego paying a dividend. He says use that cash to invest in the streaming service instead and get the company to be valued as a streaming service, Mike, as opposed to being valued as one of the media companies, which are obviously valued lower than the streaming companies like a Netflix. Your reaction?
Yes, so Netflix has a higher market cap than Disney, and Disney does 2.5 times the revenue and makes 5 times the amount of money. So I think Dan Loeb is onto something here. If you want that multiple expansion, you need to invest in the growth portions of your company. And so the future of media, the future of TV is in streaming, and right now there's an arms race to build up as much original content to tie people to your platform as possible. And this is going to be a difficulty for Netflix going forward because they won't be able to invest the amount of money or put the amount of capital into streaming the way Disney can. So I think Dan Loeb is onto something here.
All right. Well, we haven't heard back from Disney yet. We're waiting on that. Thanks, everybody. We'll be right back.